Welcome back to Investing Talk Podcast.
Today we're looking at Semler Scientific.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave in the comments below.
So let's get into the analysis.
This is, it's one of the most fascinating and, frankly, bizarre investment stories we've run into all year.
Yeah.
It really presents this fundamental identity crisis.
It really does.
You have a company that's traditionally known for one thing, its core business in vascular screening technology.
Right, the QuantaFlo PA device.
Exactly. But now, the entire narrative, the stock performance, it's all completely dominated by its second job, if you will.
Which is being a pioneer in Bitcoin treasury management. It's a medical device company that just decided to become a proxy for a digital asset.
It's a huge shift.
And what's fascinating is just how abrupt it was. Semler Scientific is only the second public company in the U.S. to go all in on Bitcoin as its main treasury asset.
And that was back in May 2024, right?
Correct. And look, this isn't just some speculative side bet. This has fundamentally changed the company's entire financial center of gravity.
It changes how they make money.
Exactly. And it changes how we and how you as a listener have to evaluate its performance. We're not just looking at a healthcare stock anymore.
It's the stunning dual identity. But, okay, before we get to all the crypto excitement, we have to look under the hood at the traditional business.
We have to.
Because its health, or maybe lack of health, is what drove them to make such a radical shift in the first place.
That's the perfect way to frame it, and we have to be brutally honest here. The core healthcare operation is facing some serious, persistent headwinds.
So what's the core issue?
The key problem really stems from changes in how the government pays for things. Revenue is falling because of recent changes to CMS reimbursement rules.
For anyone who doesn't know, CMS is the Center for Medicare and Medicaid Services.
Right. And those changes basically meant that government payments for certain screening procedures, which rely on Semler's device, just became a lot less profitable for clinics to perform.
And you can see that impact in their financials, can't you? The numbers are,
well,
they're shocking.
They're pretty stark. For Q2 2025, revenue came in at $8.22 million.
And that was a massive contraction. We're talking a 43.19% drop year over year.
A huge drop. And Q3 was even worse. It landed at $7.49 million.
Wow. Which is down.
Down 44.56%. So this is not just stress. This is a deep wound in their main revenue stream.
And that must be putting a ton of pressure on their operations.
Oh, it is. It's significant operational stress, to put it mildly. That stress led to a Q2 operational loss of $1.2 million.
Okay.
And that number factors in expenses like $1.9 million in stock-based compensation and also about $500,000 for legal costs tied to a Department of Justice settlement.
So operationally, they are shrinking and burning cash.
They are. However, there's a really crucial caveat on the legacy side of the business.
Okay.
They still have a competitive moat. They've got very specific FDA-cleared intellectual property and, maybe more importantly, really high switching costs for the clinics who already use the QuantaFlo device.
So their existing customers aren't just going to jump ship overnight.
Exactly. They're facing these policy headwinds, but their user base is sticky.
Okay, so we've established the healthcare side is the problem. Now let's talk about the absolutely radical measure they took to solve it.
This is where the story gets wild.
It's where you see that identity shift just completely take over. Despite those terrible operational numbers, the Q2 2025 earnings per share, the EPS, was astonishing. What did they post versus what was expected?
Well, prepare yourself. The company beat expectations wildly. They posted $5.04 per share.
$5.
$5.04 versus a forecast that actually predicted a loss of 22 cents.
How is that even remotely possible when their core revenue just cratered by 44%?
It's possible because that beat, and let's be perfectly clear about this, was driven entirely by Bitcoin.
The whole thing.
The whole thing. We are talking about $83.8 million in unrealized Bitcoin gains.
Unrealized.
And that translated into a net income of $66.9 million. So just think about that. A medical device company posts a massive operational loss, but their treasury trade turns that into a runaway profit.
So the Bitcoin treasury has just completely replaced their traditional business as the main financial engine, for now at least.
It's the whole story right now.
But I want to focus on that word you used, unrealized. If that gain is unrealized, it's not actual cash profit they've banked by selling anything, is it?
That's a critical distinction to make, and you are absolutely right.
So if the price of Bitcoin drops, that incredible $5 EPS just evaporates.
It does. These are mark-to-market gains. They just reflect the increase in the value of their holdings on paper, not actual cash from sales, and this ties directly into their strategy. Ultra-aggressive accumulation. They are not focused on taking profits.
So what is the accumulation strategy? I mean, they aren't just dipping their toes in the water. They're going for it.
They are exceedingly aggressive. The Bitcoin Treasury added 2,723 Bitcoin year-to-date through July 2025.
Wow.
And that strategy has generated a stunning 31.3% yield year-to-date on those holdings. And since they started this back in May 2024, the total return is around 300%.
So how much do they hold right now?
They currently hold 5,021 Bitcoin, but the aggressive part is their target. They are aiming for 10,000 Bitcoin by the end of 2025.
10,000. That's the milestone the market is watching.
Yeah.
Okay, let's talk about funding. They say their balance sheet is robust, no real debt, which is great.
It is.
But buying all this Bitcoin isn't free. They raised $204 million this year alone through their ATM equity facility. They're funding this crypto treasury by issuing stock. Doesn't that mean they were just diluting shareholders like crazy to bet on Bitcoin? What's the risk there?
This is the crucial counterpoint. The ATM, or at-the-market facility, lets them issue new shares directly into the market. So, yes, you are correct. Raising $204.4 million that way means they are significantly increasing their share count.
And that dilution is the cost of this strategy.
It's the primary risk. They're essentially asking existing shareholders to absorb that dilution so the company can buy more Bitcoin. The bet is that Bitcoin's appreciation will far outpace the negative hit from the bigger share count.
So investors are paying for the Bitcoin. What does that tell you about management's confidence?
It signals extraordinary insider confidence. I mean, they still have $300 million in capacity left in their authorized $500 million ATM facility.
So they can keep going.
They can. And management is effectively choosing to reinvest their free cash flow, which was $24 million in 2024, and this new equity directly into Bitcoin, rather than doing things like paying dividends or buying back stock.
They think the best return for shareholders is just more Bitcoin.
That's the bet, even if it comes at the cost of short-term dilution.
So while Bitcoin is clearly the engine right now, we shouldn't just forget about the future of the medical side.
No, you shouldn't.
Because that's what provides the baseline cash floor and, potential long-term stability if they ever need to de-risk the treasury. So what's happening with that medical pipeline?
That's the important future growth vector. It's kind of decoupled from the share price right now, but it could become very relevant again. They set up a new subsidiary called Cardiovanta.
Okay, what's their focus?
It's specifically to pivot away from the pressure on the current PAD device. Cardiovanta is targeting much larger heart disease markets, moving beyond just simple screening.
And is there a catalyst to watch for?
There is a critical one, a pending FDA 510(k) clearance for a heart failure product. If that clearance comes through, it represents a huge speculative catalyst for the traditional side of the business. It would open up a much broader and, frankly, less reimbursement-challenged market for them.
Got it. Now, shifting back to the technical picture, how has the market actually reacted to this Bitcoin-fueled momentum, especially after that wild Q2 report?
Well, the price action since the pivot has been constructive. We are seeing a pretty strong basing pattern, which is characterized by higher lows.
A good sign.
A good sign. And after that massive Q2 earnings report, the chart confirmed a golden cross formation.
So the 50-day moving average crossed above the 200-day.
Exactly. A classic bullish indicator. It reflects that strong underlying momentum and, of course, the stock's correlation to Bitcoin's performance. Right now, the stock is consolidating around $28.10.
And what are the key levels to watch?
You want to watch $25 as key support and $30 as a crucial resistance level. If it can break 30, that would signal a further sustained move up.
And are there any external factors here? Anything beyond the technicals and their own buying that could push this forward?
Absolutely. We're seeing some rumors of potential merger talks with a company called Strive. And if that moves forward, it's not just about merging operations. It would likely be a strategic play to amplify their Bitcoin treasury scaling and maybe even jumpstart some new digital credit projects.
And what about the macro picture?
On the macro front, Semler is now essentially leveraged to the global economy through Bitcoin. Any potential Bitcoin rally that might result from, say, future interest rate cuts, Well, that directly benefits their treasury. It just amplifies that impressive 31% yield they've already seen this year.
Before we wrap this all up, we have to address the elephant in the room. The significant legal overhang that is clearly suppressing sentiment.
You can't ignore it.
You mentioned legal costs earlier. What is the state of that risk?
It's a tangible negative that is keeping the mood pretty muted. The overall market sentiment is predominantly bearish right now. You see that in scores hovering between -0.25 and -0.64.
And that's because of?
It's largely due to ongoing investigations by several firms, including Braunstein, Gowertz, and Grossman, that are looking into corporate wrongdoing claims from before 2021.
So these are legacy issues, but they still represent a real liability and create uncertainty.
Correct. They are pre-2021 issues, and the DOJ settlement is on track to be finalized, costing them about $500,000 in Q2. But the crucial mitigation here is tied directly to that cash buffer we just discussed.
The ATM facility.
Exactly. The remaining $300 million in capacity from that ATM raise acts as a robust financial firewall. It gives them confidence they can handle potential fines or settlements without messing up the Bitcoin accumulation strategy or having to rely on their already depressed operational cash flow.
So the market has likely already priced some of this in.
It appears so, especially given the steep revenue drop we've already seen.
Okay, let's unpack this and synthesize the core thesis for everyone listening. This is really a two-part story.
It is.
You've got the healthcare operation, which provides a solid cash floor, $24 million generated in 2024, and valuable IP with high switching costs. That's the safety net. But the engine for all the immediate growth and financial success is now, without a doubt, the aggressive Bitcoin treasury strategy. It has completely flipped the company's profile from a struggling medical firm to a highly volatile crypto-leveraged growth play.
That's exactly right. And to put this into context, this is a multi-year investment thesis. It's tied primarily to two major milestones:
The Bitcoin target and the FDA clearance.
First and foremost, hitting that 10,000 Bitcoin accumulation target. And second, getting that successful FDA clearance for the new heart products from Cardioventa.
So what's the next big thing to watch?
We need to watch the Q4 2025 earnings very closely. We expect those in early March 2026. Those results will be absolutely key to confirming that the Bitcoin yield can continue and that their aggressive accumulation strategy, funded by dilution, is actually working.
The real question here is whether the management of a traditional healthcare company can successfully transform it into a Bitcoin proxy while, at the same time, launching a new wave of life-saving medical devices. It's certainly one of the most unique, high-risk, high-reward investment stories we've seen all year.
If you want more insights like this, make sure you hit that subscribe button for more analysis.